Hello, everyone. Happy Wednesday. My name is Marilyn Wagner, and I am the Chief Experience Officer of the Credit Union. I want to extend a warm welcome to everybody here virtually to our webinar on bereavement and guidance, pension guidance, steps for beneficiaries after a loved one's passing. Now, we all know this is a topic that many of us don't want to even talk about, but I want to express how important it is for you to understand the process that you need to go through and the processes that you need to take when a loved one passes, whether it's through the IDB or through the credit union. Having this knowledge enables you to take the appropriate steps during a very difficult time for many of us that we all have experienced. So today I'm going to welcome Damian. He is the Senior Associate Pension Officer at the IDB, and he's going to give you a lot of information that you can utilize. Now, some housekeeping items. One is this webinar is recorded. So after the event, probably by the end of the day, you're going to receive an email with a link to the webinar. That way you can take a look at it, you can review the information, and you can ask questions. Additionally, this webinar is in English, but many times we also do them in Spanish. And if you want to go to our YouTube channel, IDB Global Federal Credit Union's YouTube channel, you can take a look at previous sessions. And there is one about bereavement as well in Spanish to take a look at that information. Now, I do have to tell you that right now we have our family referral program going on, and that is a wonderful step to be able to make sure that the next generation has the benefits of credit union membership. So when you're going through all of this and your loved one passes and you don't not quite know how to navigate, they are on the account. They already have credit union membership, and then that way the process is so much easier. So I highly encourage you to email us, to call us, whatever you need to do to get information on that promotion that's happening right now. And actually, we are offering each person gets $50. So that's a great incentive to make sure that everything is in place. That way there's no stress on your family, et cetera. So give us a call so we can tell you all about that program. Now, question A, right before I hand it over, the Q&A section. If you do have questions, we are going to be taking them at the end of the presentation. So it says Q&A in the lower right-hand corner. Put your questions there, and we'll take as many as we can. And if we can't answer them, we'll be sure to follow up with you. So Damian, I'm going to extend the platform to you. Welcome, and I'm so excited to hear about your presentation.
Hello, Marilyn. Thank you, everyone. Welcome. My name is Damian Caldini. Welcome you to a new session of this webinar that we have been holding with the credit union. I think that it's very important for all of us to know how to proceed or to communicate to our families and beneficiaries how to proceed when a loved one passes. I belong to the Staff Retirement Plan Secretariat. So what I want to tell you is what are the main benefits that are payable upon the death of a current retiree from the bank, and how we do articulate the payment of those benefits. So if you want, let's start reviewing the two basic benefits that are payable upon a retiree's death, and then we are going to see what is the process that your beneficiaries need to follow upon the passing of a retiree. So let's start. The staff retirement plan, the pension, once you are a retiree, upon the retiree's death, there are going to be basically two benefits paid. One is going to be related to the pension. Okay, so let's focus on the death benefit payable in relation with the pension. When a retiree passes away, we are going to define whether if there's a surviving qualified spouse or if it's going to be a one-time lump sum payment payable to beneficiaries designated by the retiree. Okay, so in the case we identify that there's a surviving qualified spouse for the plan is the person that you were married to on the last day of your work as staff. So if you were married when you were a staff and then you retire and you continue being married to that person and you pass away as a retiree, and that person is still your qualified spouse and survives you, that person would receive a default of 50% of the retiree's pension amount by the time the retiree passed away. There are some exceptions. This is like the general rule, okay? There are some exceptions that some retirees, upon their retirement, they elected to increase that 50% to their survivors, okay? But as a general rule, if there's a qualified surviving spouse, upon the retiree's passing, that qualified spouse will continue receiving 50% of the retiree's pension amount. If the retiree passes with no qualified spouse, either because by the time they pass away they were single, widowed, or divorced, okay, what is going to happen in that case is there's not going to be a survivor's pension, but a one-time lump sum payment payable to the designated beneficiaries. If you are a retiree receiving a pension from the staff retirement plan, by the time you retire, you filled a form called designation of beneficiaries in case of non-surviving spouse. So in that form, you designated people or beneficiaries that are the ones that are going to receive the one-time lump sum payment in the case of the passing of the retiree. It is payable the death benefit and not the surviving spouse, okay? Once, let's assume that the retiree passes and then we approve a qualified spouse surviving pension. By the time that qualified spouse passes away, there's not going to be payment, okay? So this is the main provisions of the plan when a retiree passes away, and these are the payments that are being payable in relation to the pension of that retiree, okay? Another thing that is another benefit that is going to be payable upon the retiree's passing is going to be the retiree life insurance program. All the retirees receiving benefits from the staff retirement plan, they are covered by a life insurance. When you retire, you opted to be covered under the basic coverage or under the high option coverage. We are going to see how this works. So if a retiree passes, okay, there's going to be a payment to designated beneficiaries that are registered in a different designation of beneficiaries form from the one that I told in the previous case. So you fill two different designation of beneficiaries, one for the retirement pension, and the other designation is in relation to the life insurance program. So when the retiree passes and we take notice about the passing of a retiree, we identify the beneficiaries designated by the retiree. Then we identify whether if the retiree was covered under the low coverage or under the high coverage. If the retiree was covered under the low coverage, there's going to be a one-time payment of $10,000, okay? And if the retiree was covered under the high coverage, under the optional coverage, that amount is going to depend on the age of death of the retiree and the salary as a staff of the retiree, but the payment is not going to be less than $15,000, okay? In this case, not only the retiree is going to be covered by the retiree life insurance program, but also the qualified spouse of the retiree, okay? So if there's a death of a qualified spouse, and if the retiree remains alive, there's going to be a payment to designated beneficiaries that will have the following amounts. If the qualified spouse was covered under the low coverage, is going to be payable $5,000. And if the qualified spouse was covered under the optional coverage, is going to pay $7,500. If the retiree remains alive, the retiree is the one that is going to receive these payments, okay? If the retiree is not alive and the qualified spouse is receiving a pension, okay, a survivor's pension, by the time that qualified spouse pass away, since there's no retiree alive, we are going to pay those amounts to beneficiaries designated by the qualified spouse that are going to be registered when we approve that qualified spouse pension. Okay. If the retiree passes away being single, widow, or divorced, the only payment that is going to be done in relation to the retiree life insurance program is the one for the retiree. So there are no other covered beneficiaries but the retiree or the qualified spouse. So these are the two most general cases and the two main benefits that are payable upon the passing of a retiree. Either there's a survivor's pension or a one-time lump sum payment in relation to the pension, and there's also a payment in relation to the retiree life insurance program. Okay, those are two different benefits, and they are payable upon the passing of the retiree or the surviving spouse. Okay, so one of the main questions that we have is, what do we need to do, or how do I inform the passing of a retiree, or how do my beneficiaries would know what to do in the case of my passing? So I prepared this key step slide that I would recommend you to print out and handle to your beneficiaries, because this is the most common procedure, okay, to communicate the passing of a retiree and also to process the approval of the benefits that are payable. The first of all, it's very important for your family to contact the secretariat informing the date of death of the retiree. Okay, here you will find the phone number and the email that you can report the passing of a retiree to. Okay, this is very important because we as pension officers, when we take notice about the passing of a retiree, what we do is we give notice to the medical insurance department and also to the payroll department in order to avoid any overpayment of pensions that shouldn't be done. Okay, so once we get notice about the passing of a retiree, we internally communicate to all the impacted areas, and we also analyze the case to identify whether if there's a surviving spouse or if there are beneficiaries that will need to receive a one-time lump sum payment. Okay, based on that is going to determine the process that we have to follow. And what we are going to do is we are going to contact the family or the surviving spouse, or we are going to contact the beneficiaries that you designated on the forms, and we are going to provide those beneficiaries with a set of forms that they need to fill. Basically, it's an affidavit saying the name of the beneficiary and request the payment of X or Y benefit, if it's a death benefit or if it's a life insurance benefit, and they will need to provide some bank information. With that form, they will need to present some proof of ownership of that bank account, okay? And they will also need to send us the death certificate of the retiree. So once we have everything we need to process the approval of those benefits, the pension officer is going to submit for approval the case. And when it gets approved, we are going to process those payments through the finance department, and we are going to provide also to the beneficiaries, before they receive those monies, they are going to receive an approval letter signed by the executive secretariat, so the beneficiary can prove the origin of the funds. One important mention is that the benefits, the one-time payments that the beneficiaries receive, they might be taxable, and if the beneficiary needs to pay taxes over those benefits that they are receiving as a one-time lump sum payment, they are not reimbursable, okay? So I really suggest you to print this. You are going to receive, after the webinar, you are going to receive this presentation. I recommend you to print this key step slide so you can handle to your families and let them know that this is the procedure that they have to follow. They just need to call and tell us about and inform us about the passing of the retiree, and then we will push the process, okay? There's no need for the beneficiaries to be following up on the case. We are the ones who follow up the case because we want to pay to the beneficiaries and close the case as it is expected. Within the administration team, we are 4 pension officers that are active today, and you can contact any of us to reply any of your questions regarding your pension, your beneficiaries, whether if you opted to get an enhanced pension for your spouse, and so on. This presentation is very short. There are not so many slides, and I think that we covered most of the general questions and the general cases regarding the passing of a retiree. So, Marilyn, I think that we are ready to start answering questions, or if you think that there's something that was not that very clear, we can clarify. Okay.
So I think we can go to the question section just to answer any specific questions that people may have. If there's some personal information, Damien will probably recommend that you contact him directly. As far as the credit union is concerned, if there's any questions regarding beneficiary accounts, please feel free to email us, and we'll get back to you right away with the answers to your questions. But Damian, I think if you go to the inbox, there's a couple of questions for you regarding some specific questions.
Okay, I will start reading some questions. Okay, how is the one-time lump sum payment calculated? If this question is for the life insurance, okay, it's going to be a fixed amount if it's a low option, or it's going to be a percentage of the last annual salary as staff. If the question is related to the one-time lump sum payment that is in relation to the pension, is going to be a percentage of the annual pension that the retiree receives, and that percentage is going to be in direct relationship with the age of the retiree's passing. It can be as big as 200% of the annual pension of the retiree if the retiree passes before 62, and it can be as low as 50% of the annual pension the retiree received if the retiree passes after 72 years old. Okay, so that is how we calculate the amount. We will share the PowerPoint. Yes, could you tell us about the funeral cost payment of the retiree? There are no funeral cost or payments, okay? That the retiree life insurance program is going to cover everyone at least in $10,000, all the retirees at least in $10,000. There are no additional funeral costs coverage, okay? The retiree life insurance, it should be used to, I think that in the past it was called like the funeral costs, and then at some point it changed from the name retiree life insurance program. So once an IDB retiree dies, is the qualified spouse able to continue medical insurance coverage under the IDB plan? We are not covering medical insurance questions. If you have this question, the medical insurance coverage for the surviving spouse is not a yes or no question. It depends whether the retiree was covered under the retiree medical insurance, and if the qualified spouse is eligible to continue the medical insurance program. That particular question should be addressed to the HRD department, to the insurance department. Okay. I need to change my beneficiaries. If you want to know about who your beneficiaries are, or if you need to update those beneficiaries, please send an email with that request to the email of the secretariat that you find on the presentation. I mean, we have like a general BPF SRP mail line, so you should address those questions or those requests to that email, and a pension officer will take care of that case and will send you the designation of beneficiaries for you to update or for you to get informed. Is the lump sum pay? Let me. I wanna go from the early one. I wanna answer first the first ones. Give me just 1 second. Where can we find the designation forms? You need to ask to the staff retirement plan. Does this process apply to children, or is it only if you pass away and you have children that are under 21 years old? Okay, that's not the general case for a retiree. But if you, as a retiree, have children that are under 21 years old, besides the survivor's pension or the death benefit, there's going to be a benefit payable to children, but I'm not going to enter in that particular case. If there are children under 21 and there's a qualified spouse, believe me that your children will receive the subsidy, and we are going to be the ones pushing that benefit to your children. How do we know if we need to pay taxes on the lump sum of the life insurance program? That's something that you need to know. Okay, that's something that is a personal. If your beneficiaries need to pay taxes for the life insurance, for the death benefit that they receive, it's just a personal matter. That is what we are trying to say. If it's part of the beneficiary to identify if they need to pay taxes or not, because maybe they are living in the US and they are taxable, and maybe they receive the payment living in another country where those benefits are not taxable. So that is a personal, that is a very personal affair. Okay, all the employees, I'm not going to answer questions regarding medical insurance, if the qualified spouse is covered or not. If you have a medical insurance question, please address that question to the medical insurance team. Okay, this is not the intent of the webinar. Are all employees automatically covered by the life insurance program? All the employees that retire, I mean, we are talking about the life insurance for the retiree life insurance program. All the retirees that are receiving a pension from the bank are covered by that life insurance program. Are the 10,000 insurance payment also taxable? Most of the cases, yes. How do we know which officer pension will be assigned to me? There's no need for you to know who is. I mean, we are the ones. We have divided the organization into different clusters, and each pension officer is in charge of all the clusters. And we can take that case like independently. So there's no need for you to know who the pension officer assigned is. What employees should do to increase the amount paid to the surviving spouse. What the employee should do to increase the amount paid to the surviving spouse. That is an option that you need to review with your pension officer by the time that you retire. Okay, this is an irrevocable election that you do when you are filling your retirement application form. How do we communicate with the officer? You can send an email to the BPF SRP, or you can send us an email directly to the pension officers. On the last slide, you will find all the pension officers that are active today. Once a retiree dies, is the qualified spouse able to continue medical? I'm not going to answer the medical insurance questions. Okay, these rules applies for everyone independently if they live in the United States or if they live abroad, okay? Another question of medical insurance. If a high payment life insurance has been chosen, is there an age in which it is better to switch to a lower insurance premium since the payoff decreases. There is no better to switch to a a lower life insurance. Okay, we can discuss we are not intending to explain the retiree life insurance program as it works. If you want, we can invite you to a specific retirement seminar in the upcoming months. But the high option or the low option is an option that you take when you are filling your retirement application. Okay. The insurance program is for single person as well. Yes, if you're single, you are being covered by the life insurance, but you are the only one that is going to be covered by the life insurance. What about global when the principal? Okay, I think that there's a question for the credit union. The phone and okay, could you include the
Any credit union questions, just to summarize that, should be sent to creditu@idbglobalfcu.org. So any specific questions you have, please email us there and we'll be sure to respond to you.
Okay, I have a question. On average, how long does it take once the surviving spouse contact the SRP before they can start receiving the pension benefit? It is very, very important to give us notice about the passing of a retiree as soon as it happens, whenever you can, okay? Because this is going to we are going to be able to avoid any overpayment, and this also give us the trigger to start working with a survivor's pension, if it's applicable to the case, to approve the pension as fast as we can, because most of the surviving spouses, they remain with the medical insurance, and we want to reduce that gap to the minimum. Even though when a retiree passes away and there's a qualified spouse, if the retiree was covered under the medical insurance, the surviving spouse will continue having medical insurance for, I think that it's 60 or 90 days so it gives us some time to activate the survivance pension and the medical insurance coverage for the new surviving spouse. But if it takes like 1 month, I mean, we are not delaying the survivor's pension more than 1 month. If we got all the information quickly, we can process it as soon as, I wouldn't say in the same month of the passing of the retiree, but the next month for sure. The 50% the spouse gets is subject to tax in the US. Will the bank continue to reimburse those taxes? If you were eligible for tax reimbursement when you were a retiree, your qualified spouse pension is going to be also eligible for tax reimbursement. What if you were single at date of retirement, but were married after date of retirement? Okay, if you retire, when you terminate your relationship with the bank, you are single, and then you retire and get married, okay? Or let's say that you were married to someone, then you divorce that person, and then you remarried to someone else, you have 1 year since the marriage, okay, to contact the secretariat through a written notice, okay? And you can explore to create a pension for that new spouse, okay? That new spouse or that first spouse is not going to be identified as a qualified spouse. So they do not have the right to get a survivor's pension. If you want to provide a pension for that new spouse or for that newly spouse, you need to contact the secretariat within the first year of the marriage, so you can opt to reduce your pension to buy a pension for your new spouse upon your passing. Okay, but there are eligibility criteria, and we have to follow a process. If that is your case, please get in contact with the secretariat, and remember that you have just 1 year to contact us and to express the intention of providing a pension for a no qualified spouse. Okay. The 54, we are ready. What if, okay, can you change your pension from 65% back to 100%? No, it's not. I mean, the options that you take when you are when you apply for your pension, those decisions are irrevocable. Okay. Does the pension payment start automatically at the age of 62 if it was not started before? No. In order for us to start paying the pension, you need to apply. We do not default payments when you reach certain age. You need to contact us. That pension needs you. There's a set of forms that you will need to fill. You will need to be working with your pension officer, and the pension officer will submit your pension application for approval. So there is no default payment when you reach a pension, when you reach certain age. Do qualified spouse living get reimbursed? Is the one-time lump sum subject to COLA, and how it is calculated? The one-time lump sum payment is a percentage of the pension that the retiree was receiving by the time that they passed away. So if the pension of the retiree was adjusted by COLA each year, the lump sum payment that is going to be paid to the beneficiaries, and that is based on the pension that the retiree was receiving by the time they passed away, so the lump sum payment is already adjusted by COLA. Not because it is adjusted by COLA, it's because the pension that we use to calculate that benefit was already adjusted by COLA. What does pension work if employee dies before retirement but are partially vested? We are not going to enter into that kind of exception. That's a very specific case, and you are going to get confused. Of pension and your spouse passes over your pensions. If you choose to receive a 75% of pension and your spouse passes away your pension, yes, we are not going to talk about some specific questions. If you increase your surviving pension beyond 50% and you have any question regarding that, please get in contact with us, because it's not a general question, and I don't want to go into specific cases where we might lose all the audiences. I think that we answer most of the questions, because most of them are related to medical, taxes, and how that benefit is calculated. Okay. The rules for safeguard beneficiaries are the same for U.S. resident. Yes, the plan is one, and it does not differentiate between U.S. residents and Latin American residents. The benefit is the same for all of the retirees, but if it's taxable or not, it will depend on the beneficiary's tax situation. Okay. When the beneficiary passes away, what happened with their children? I don't understand the question. What happens with the children in terms of what? How much time in advance we need to contact the secretary to let you know that I am retiring? Or do you get in contact with us? When you are terminated on the system, we are going to receive a separation clearance notice, and that is going to be the trigger for a pension officer to contact you and to start working on your retirement application. If you want to be proactive, or you want to contact any of the pension officers to start working on your retirement application before time, you can do that too, and we are accepting, and we can work with you, get together, estimate your payments, and walk you through the retirement application process. When the beneficiary passes away, what's the difference between beneficiary and surviving spouse? Okay. So Ricardo what the beneficiary passes away, what happens with their children in terms of pension. If there's a qualified spouse pension, let's say that the retiree passes away. We activate a survivor's pension, okay? Once the survivor's passes away, there are no more payments, okay? There are no any lump sum payments, or there are no any pensions going forward. Once the survivor's qualified spouse passes away, the pension stops and there are no additional payments. What's the difference between beneficiary and surviving spouse? I mean, the surviving spouse is a beneficiary, but it's a special kind of beneficiary, okay? The surviving spouse are the ones that are eligible to receive a surviving pension. A beneficiary for us, it's a person that you designated as the ones to receive a one-time lump sum payment if a one-time lump sum payment is payable and not a survivor's pension. What if the children are under 21? Okay, let's say that you are a retiree, you pass away, you have a qualified spouse that start receiving a pension. That qualified spouse passes away, and there are children under 21, those children will continue receiving a subsidy. It's not a pension because it's not a lifetime pension. The children under 21 of a deceased retiree will receive I think that is going to be $600. It's a fixed amount. Today it's going to be $600 per child until they reach 21 years old or they marry, wherever happens first. So if a retiree passes away and there's a qualified spouse and children under 21, the qualified spouse will receive the survivor's pension. The children under 21 years old are going to receive the children benefit, which is going to be a subsidy. The survivor's pension stops when this qualified survivor passes away, and the children benefit stops when the children reach 21 years old or they married, if they married before reaching 21 years old. Okay. I don't know, Marilyn, if there's something else that you want to share.
I did not see any additional questions. I do want to emphasize, however, that everybody who registered for the event will receive an email today with a link to the recording. And then additionally, Damian, if it's okay, we will also send a PowerPoint presentation out. That way everybody can see that as well. Any additional questions, CreditU, CREDITU at idbglobalsu.org is the email for the credit union. We'll be sure to get back to you. And I know there's some cases where members have reached out to me during this webinar, and a member of the team will connect with you. And additionally, Damian has put all of the information and ways to contact him and the team so that you can see that here, and please reach out to him. Regarding Spanish, Melissa did a wonderful presentation in Spanish a couple of months ago. Please go to our YouTube channel, and there you will be able to see the presentation in Spanish. Damian, I'm so grateful that you're here to do this. I know this is very valuable for membership, and there's so many amazing questions, and I know it's very important to everybody. But I do want to encourage, it is so much easier if your family members or your beneficiaries are members of the credit union. Trust me, it's a much easier process, and it's one less thing that they need to worry about. So please feel free to refer them now and make them members. So when the horrible event happens, that, if someone passes, they are all set and ready to go, and there's one less thing that they need to do. So I want to thank everybody. We do have a lot of webinars throughout the year. I can't believe we're already in September, almost October, but we look forward to seeing everybody. And again, we thank you for your membership, and please reach out to us with anything you need.
Marilyn,
Yes.
let me give, can I address one quick question that?
Of course.
First of all, keep all your records up to date. If you don't remember your beneficiaries, you can contact us. Usually after these seminars, we have like 134 people connected. So most of you are going to get back to the Secretariat to review who your beneficiaries are. We usually get like a tsunami of requests to review the beneficiaries and to update the beneficiaries. So please be patient, because after these webinars, we receive like a lot of update requests or to review the beneficiaries that you already have designated. So if you want to know your beneficiaries or you want to update them, please get in contact with the Secretariat. Do not worry about how do we get notice about the passing of a retiree. I have been working in the Secretariat for the last 7 years, and we've never missed any payment, or we never missed any survivor's pension. No one was left with without medical insurance coverage if they were eligible to receive. So do not get stressed. What I really suggest you to do is just print out the slide with the key steps that I prepared for you and handle those and handle that slide to your beneficiaries and tell them, you have been designated as a beneficiary of my pension or my life insurance. If something happens to me, the only thing that you need to know is you need to follow these key steps and get in contact with the staff retirement plan, and they will help you to push the process and the benefit. Okay. There's another question that what happens if a retiree passes away and the qualified spouse and there's a disabled children? I wouldn't say disabled, someone with special ability. Okay. So this is a very particular case. So if there's a retiree that passes away, we activate the survivor's pension, and there's a children with special ability, with special needs. Okay, if that when you retire, you can reduce your pension and generate a survivor's pension additional for that children or for anyone who you want to leave a survivor's pension to. But you will need to reduce your pension throughout all your life in order to generate that survivor's pension. This is an option that you have only when you are retiring. If you already retire and you didn't elected to create a pension for a survivor, then you don't have the chance to do so. If you are thinking about retiring, okay, and you want to explore the possibility to generate a survivor's pension besides the one that is granted to the qualified spouse, please get in contact with us so we can give you an estimate of how much your pension will be lower throughout all your life, okay, in order to generate a pension for a third party that is not your qualified spouse upon your death, okay? This is a very particular case, but I really suggest you to get in contact with us in case you want to know that. So I think that that's pretty much it. Print the key step slides, handle to your beneficiaries, get in contact with us to keep all your records up to date and beneficiaries. And it's been a pleasure. I mean, all these webinars, they get bigger and bigger and bigger every time. So thank you for listening to us. I hope this information had clarified most of your questions and doubts. If you still have any question or doubt, I'm open for you to contact me and we can work it out. Okay.
Excellent. Thank you. And I know there's so much more information. We do have additional webinars throughout the year. So from a credit union perspective, be sure to check back and also check with Damian if he has any additional webinars or events that he can help train you. Thank you, everybody. Have a great day and a wonderful rest of the day.
Thank you, everybody. See you next time. See you in the next webinar.
Ciao, ciao.
Bye-bye.